What's up, guys? How you all doing today? Bless you all for tuning in. So today we are going to be discussing one of the most traded strategy from ICT, which is the Asian liquidity sweep. So now a lot of people, especially beginners, right, they actually stumble upon this strategy, especially if it's the first time you want to trade ICT concepts. So a strategy like you venture into is the Asian liquidity sweep. So after the Asian accumulation, where the Asian range is considered as the accumulation, while the manipulation is considered during the London range and the distribution, which is the New York, right? Which is pretty much good, pretty much logical, systematical to trade, right? So it's a very good strategy and very easy strategy to grab. So sometimes it's considered the continuation, accumulation, manipulation, and distribution. So but for the context of backtesting, right? So what I usually do, what I did was that I consider all the Asian range to be an accumulation, so that you guys will not confused. I wanted something that is systematic. You understand? So I don't have to guess if this is a continuation, if it's a no. I just made Asian range the accumulation. So once I see the accumulation being swept during the London session, then a confirmation like a market structure shift, inverse and fair value gap. I actually, while I was testing it, I did not actually use inverse and fair value gap. So I just use market structure shift. Change the state of delivery or a market structure shift, then place my limit order on the breaker block and stop loss below, then target the next liquidity range, so as seen in this picture. So what I actually did, the parameters for this testing right, was the 4 hours candle, 2 4-hour candle of the daily range, the true open daily range, right? The first 2 4-hour candle of the daily, like let's say for example the daily candle opens, right? The first 4 hours candle and the second 4 hours candle, that's what I consider as the true Asian range to trade this strategy. All right. So during the New York London session, so I start looking for the entry, right? A sweep of the Asian high shows a sweep of the 2 4-hour candle, right? A sweep of the 2 4-hour candle on the upside. Then I'll be looking for bearish movement, right? A shift in market structure, then I'm going to enter the trade and ride it down to this point. Then vice versa, the same thing also applies for a bullish scenario, right? So a sweep on the 2 4-hour candle after the daily open candle, right? On the 15 minutes time frame. So the time frame where I look for the confirmation is actually 15 minutes, not the 1 minute or not the 5 minutes, is the 15 minutes, right? So I look for confirmation on the 15 minutes time frame, a change in state of delivery or a market structure shift, right? Something like this. If you see right here, something like this. So a market structure shift and then distribution to target the next daily range, right? I target 1:2.5 or sometimes 1:3. So this is how I backtested this strategy in gold. All right, so I backtested it in gold, about more than 80 trades logs. Okay, so more than 80 trade logs. So if I calculate the missed entry together, it's about 100. It's about 100 trades, right? But I minus the missed entry because I use limit orders, right? Sometimes I use market executions too, so it depends. So it was within the span of 4 months, starting from March to January, February, March, April, May, June, July. So March to July 17th. So and I took a trade samples of about entry 80, more than 80. Then if you add the missed entry to it, then it's going to be 100. All right, but I removed the missed entry because we are dealing with statistics here. So trading these parameters, and this is the result of the trades that I have took so far. So let me quickly delete this right here and let me show you the statistics, right? Start wasting much of your time. So as you can see right here, let's go to the ASIAN liquidity sweep. So you can see this was one of the first strategies that I actually tested for, because I wanted something mechanical, right? So you can see right here, I test strategy a lot. I see like a lot of strategies I've even deleted, right? Because I test strategies a lot, and just looking for that one mechanical module that I can trade and familiarize myself with, so that you get. So just working on it. So yeah, let's go to the statistics right here. So you can see ASIAN sweep. So you can see it right here. So this is the ASIAN sweep. So which pair? It is the SAL USD pair, right? So I started with about $10,000 on the simulated account, right? So I created this at July, right? That was when I created the 15th of July 2025, right? So that's when I created it. So the start date, the date I started the backtesting, the period I started from to backtesting from. So I started the backtesting period from on the 3rd of March, right? So that's when I started the backtesting period, right? So the current date, which the date that means the date I ran the test to, is 17th of July, right? So that was the date I ran the test to. So as you can see that, and the last time I actually updated it is 20th of July. So it shows that during that time when I created it, which was 15th of July and 20th of July, I backtested with 5 days, right? So, and I closed it with on the July. So I think that was the recent price. That was the where price we're currently at that point. So I could not backtest it more than that particular period. So it took about 100 trades within 4 months, right? So the current balance, right? I started with 10,000 with $10,000, right? And the current balance after the backtest, after the 4 period of after the 100 trades, that is currently sitting at is 9,000 is $9,651.99. All right, so I risk 1% per trade. So that's what I risk, 1% per trade. So you can see right here, it's 9,000. So it's sitting on a drawdown of about 4% after 100 trades for a period of 4 months, right? Which is not that huge of a deep drawdown, right, compared to the previous one I posted. If you have not watched that video, you can just click the link in the description to direct you to the video of the previous strategy that I submitted the results on a GUNVR, right? So yeah, so this is it. So this is just it. On drawdown of 4% after a period of 4 months. Like I said, right, the period of March, right, from March, starting from March, April, not even March, I think the period of April, not March, April, May, June, July, this year, right, a lot of strategies suffered. Like they suffered a lot. Like I've tested a lot of strategy during that period, and during that period was when a lot of people were just complaining about the markets and stuff like that. You get, so that period was really a tough period for a lot of strategy. So I don't really know, probably maybe recently now, maybe the strategy would have recovered the losses, or who knows, right? But if you guys want me to continue to test this strategy, just comment in the link in the description below, and I'm going to do a video backtesting this strategy, and I will upload it, right, if you want me to continue to test this strategy. So but currently now it's not, so let's quickly dive to the report, the analytics and report of this of this trade, right? So as you can see right here, we don't care about this because we don't have we don't have subscription yet, but very soon, guys. So as you can see right here, right? So we started. We already know the period that we started, right? We started during March and we ended during July, right? 17th of July. So at this peak, the strategy was doing very well. You can see that we were having a very good equity curve till April. So you can see, what did I say? April was the period that turned things around for this strategy, and then we started experiencing some drawdowns, like losses, series of losses upon losses. I think then good was just trending up. So I was just seeing sweep of up, I wanted to buy to the downside, and then got stopped out, and like that, series of streaks of losses, right? I think good was still kind of like ranging. I don't know if it's ranging, I don't even understand the market condition concerning this strategy, like in applying this strategy to the market condition back then. So but what I can remember is that it was series of losses, losing streaks, and it lasted for about April 8th to this was the bottom of the loss, April 8th to June 20th. So from April 8th to the 20th of June, right, it was losses upon losses, right? That was about April, May, June. That was about 3 months, 2 to 3 months of losing streaks, right? So in between, I have some break-evens, we have some, but I didn't think I actually utilized the risk management, right? But you can see right here, it was just going down, the equity, like once a couple of, then about after the 20th of June, try to bring their account back to break even, right? Even to some little profits, right, of about 4%. I think the peak of its profit was let me see, was about if I'm not mistaken 20%, if I'm not mistaken. Yeah, 20%. This should be 20%. That is $22,000. That's 20%. Yes, 22%, right? So went down to drawdown of about 11%, and then came back to break even again for about even if it's little profit of 4%, 4 to 5%. Then I actually ended with a drawdown of about minus 4%. So that was just the whole statistics of the whole the whole trading and every other thing. So you can see the equity curve was actually going down. So it was not only this strategy, even although GUVR actually has a lot of large sample size and considering the time frame. So this one, the sample size, the period was actually less, it's more less. So you can't really judge the strategy based on this yet, right? But during this period, it was not really performing well, right? And considering the fact that I was, like I said, I was looking for, kind of like a mechanical model, right? So this period was really tough. Not just this strategy, like a lot of strategies that I tested. So I was even still new to strategy, so I was just jumping. So this period was really tough on all strategy, like on majority on a lot of strategy, right? A lot of strategies that I've tested during this period, like it was tough. It was really tough. So if your strategy is not suffer during this period, it means that probably your strategy was built for the market condition, maybe like during ranging market condition, or it was just the strategy is just good during all kind of like market conditions, because some strategies are actually dynamic. So yeah, they have bulletproofs to all these kind of changes of market condition and all that, right? But yeah, so this was just the equity curve of a strategy. So let me take you to the trades. So all the trades that I took with the strategy, so that we can know the losing streaks and the winning streaks. So consecutive winning streaks in this strategy, right, was 1, 2, 3, 4, 5. So we have like several consecutive winning streaks, like from ranging from like 5 losing streaks, right, 4 to 5 losing streaks. But the losses, the winning streaks ranging from the winning streaks of this strategy was ranging from about 4 to 5, right? We have 4 winning streaks or 5 winning streaks. I think the highest I had while backtesting it was actually 5 winning streaks. So you can see right here 1, 2, 3, 4, 5 winning streaks. But the losses was ranging from about 10, right? 10, 11. So let's count it. You can see right here 1, 2, 3, 4, 5, starting from April. All right, so you have to understand that it started from April. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, wow, 18, close to 18 to 19. I don't know, maybe I jumped some, but you can see that this was one of the the losing streaks in, like, I don't really know, these 18 losses in a row. Like, I don't know, probably maybe I missed one or few mistakes thereabouts while backtesting, because I kind of like, I'm surprised that, the losing streaks is actually 18, Okay, so I got one here, then another 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, like, wow. So I don't know, maybe one or two ways. Probably there might be some kind of like little bit of wins, not just win, maybe move or break even or whatever. Probably I did not utilize break even system, because when I was trading, I did not actually use any break even, so I just allowed the trade to roll. So maybe if you optimize it very well, right, if you want to trade it, maybe you are optimizing it very well, right, you look at 1 to 1, then break even, right, your result might be better, right? But this is what I actually 14, 18, 10, like, let's just say probably maybe with error and everything, right, because I'm just giving the strategies some benefit of doubt. Maybe with like errors, right, you should be like 10 to 12 losing streaks, which is considering the period and every other thing, right? Yeah, there are periods where strategies are not performing very well. All right, so we don't have to use this as a yardstick to judge this strategy as is a very bad strategy, right? And secondly, probably the way I traded it, right? So this was just how I gathered the data, right? But maybe if you also took the parameter, because there are different variants of the strategy, you can trade it on the 1 minute time frame, you can trade it on the 5 minutes time frame, so you likely have different results, right, depending on the time frame. But this was the 15 minutes, right, 4 hours with 15 minutes on gold. And maybe if you even trade other assets, you might even have a very good result, a better result, probably like the US indices, like US30, or maybe like Euro USD. You definitely have a better result if you can tweak the parameters and use a good risk management. But with this management, it was kind of like terrible, or not really good. Probably if I utilized the break-even system, it would have been better. I would have secured like a good amount of I would have secured like the profits, like it has accumulated while the strategy was good. But you can see right here that there was a period where the strategy was actually good. So yeah, I can't really say, because 80 is not actually enough to actually, but it's a standard to know if you want to actually work on the project, on the strategy, right? So I was not really feeling good with the results, and I just had to opt in to test other various strategy back then. So yeah, so this was the result I saw that made me not to partake in but I did not, like I said, I did not optimize it. If you optimize it, you might get a better result. So we can see right here another one again, 1, 2, 3, 4, 5, 6, 7, 8, 9. So you can see 9, 1 win, then 2 loss. I eventually just said, you know what, let's just keep it right there. So yeah, that was the result. This is the result about the Asian liquidity sweep. So you can see it here, Asian liquidity sweep. So if you watch this video, if you want us to test this strategy again, right, if you are curious to know the current performance of this strategy, how it's going to perform in this current market condition, just say so in the comment section below, and I'm going to do another video, and I will start doing videos to test the strategies, like to live test it, then show the analytics. But before I want to do that, I want to subscribe, right? I want to subscribe to probably maybe like basic plan, so that I can show you guys the analytics, a very good and well detailed analytics, right? So this is not the analytics, right? It's just here that we can only make use of this for now. So I promise to do this, and I will do the basics and start proper the data gatherings on strategies. So that's it for today, guys. If you enjoyed this video, just like and subscribe to the channel, right? So we'll be doing more of strategy breakdown, testings, and gathering of data, improvement, and a lot of things in this channel, right? The journey and everything. So I'm just here trying to keep it up. So something that is going to motivate me, just subscribe to the channel, right? And like and comment on what you think about the Asian liquidity sweep strategy. Then yeah, catch you on the next one, guys. Peace out.